Today we want to talk about fair value gap. We want to talk about fair value gap entries, how you can master fair value gap entries. Okay, so what is a value gap? A value gap can also be known as FVG, or can also be known as imbalance. A value gap FVG, value gap, can also be known as an imbalance. It's actually some sort of impulsive move that is necessitated by price action or sometimes fundamental. All right, so it's an imbalance. Imbalance is an impulsive move on a particular candle or on a particular market instrument that is necessitated by some form of price action or some form of fundamental news. All right, so now I'll be explaining to you how to use this principle of imbalance to gain entries when trading your demand and supply zones. All right, so that's the purpose of this video for today. An imbalance, for example, this is if we're looking at imbalance in terms of candle by candle. You can see this. Let's assume this is a sell candle, another sell candle right here, and perhaps you have another one right here. So your imbalance would be let's have it clearer. You have a sell candle, another sell candle right here, and another one right here. Your imbalance will be the gap, is the gap, which is the FVG, fair value gap between the previous candle and the other one on the other side of the existing candle. So this is the FVG candle, but the one before the FVG, this is the FVG candle. This is the candle before the FVG candle. You take the gap in between the previous candle before the FVG candle and the candle after the FVG candle, gives you your imbalance, or rather your fair value gap. This is for a sell scenario. Now for a buy scenario, you have something like this, a bullish candle, and now you have another long candle. FVG candles are usually long candles. All right, they are usually long candles, are longer than the average candle in a particular range. Okay, so now you have another candle right here. These are buy candles. Now your FVG here, this is the FVG candle, fair value gap candle. Now your FVG will be the gap in between the previous candle before the FVG candle and the candle after the FVG candle. This gives us our fair value gap. All right, so that you need to know this, because this is an important part of your trading. All right, understanding the principle of fair value gap can help you to understand trading. I've made a video on fair value gap and imbalance. I made a video on imbalance, but I made that video with regards to trading high impact news releases. So I'm going to link that video in the description box of this particular video. So that video I made previously was trading the imbalance in relationship to high impact market news release. But this one now, this video is actually does not relate to, or is not dependent on high impact market news release. This one is just your normal trading day. You just get into your chart and how the principle of FVG can help you to trade demand and supply zones. All right, how the principle of FVG can help you to trade demand and supply zones on a normal market day that is not actually a news day. All right, a news and a fundamental news release day, like the FOMC or the normal NFP day. All right, so now this description I've just done here, is perhaps for a higher time frame. Now for a lower time frame, you will see something like this. For a lower time frame, you have how you can depict the FVG is like this. Here is your FVG. When there's a this on a buy on a sell trade, this is your FVG. All right, and for a buy scenario, you have something like this. So this is your FVG, this is your FVG, just like a reversal. All right, just like a mitigation in some form. So now, why am I showing this? Why am I trading this? There are some traders, some particular traders that use the FVG, the fair value gap. They trade it as demand and supply zones, because now fair value gaps can actually cause reversals. All right, fair value gaps can cause reversals. Now you might have something like this. They can actually cause reversals. Okay, this is a fair value gap. It can cause reversal if that is for a buy trade. For a sell trade, a fair value gap can cause reversal. A fair value gap can cause reversal. Now, but then I don't recommend trading fair value gaps as reversals exclusively. I prefer trading the demand and supply zones instead the reversals that occur from trading demand and supply zones instead of fair value gaps, because the demand and supply zones are more reliable. Let me show you what I mean. This is a bullish trend. This is a bullish trend. For a fair value gap will be something like this, trading this gap, trading the reversals of this form. But if you are looking at a demand and supply, you are having the markets actually come back to the demand zone, and you trade up, right? But for a fair value gap, you're just trading the gap. You are trading the gap actually. So in some sort of you are trading the mitigation. You're not actually trading the exact mitigation of the zone, but you are trading the fair value gap. So this fair value gap can cause reversal, but it is not as reliable. In my personal experience, it is not as reliable as where you are trading demand and supply zones. But I'm going to show you the right way to trade fair value gaps. I'm going to show you the right way to trade fair value gaps and how I trade fair value gaps. I'm going to show you how I trade fair value gap. So now the best way to trade fair value gap is to trade them as in two ways. I'm going to show you two ways in order that you're going to use to trade fair value gaps that are more effective. That's what I'm going to show you in this video. All right, so the first one is to trade it as a return to order block. Trading it as a return to order block when you have a valued demand and supply zone. All right, so previously what I was trying to explain to you about fair value gap, you can see right here, you can see this is a fair value gap. This is a fair value gap candle, FVG candle. All right, so you can see that this is the tip of the previous candle and the tip of the other candle, the succeeding candle. So you can see that this fair value gap caused some sort of reversal. So fair value gaps can actually cause reversal. In this case too, you can see this is the tip of the previous candle. This is a FVG candle. This is FVG, fair value gap. This is the fair value gap candle. This is a fair value gap itself. This is the candle of it. So this is the fair value gap. All right, so it actually necessitates caused a reversal. So a fair value gap can cause reversal. As I just want to show you, depict it on the chart for you. It can actually cause reversal. All right, but it is not as reliable. You can see that there is no zone here. There is no supply zone. It just, the market just come to this gap and sold. You can see it now. There was no. Let me remove the rectangular box there so you can see clearly. You can see this is a gap. This is also the candle before the gap. So the market reversed into the gap, FVG, and caused some sort of sell. All right, so an FVG can cause a sell. Here too, you can see the market reversed into this FVG, and there was a buy. Okay, this was actually not a demand zone or a supply zone, as the case might be. This one too, the market reversed into the FVG and sold. So, but this does not occur this is not respected all the time. The market does not respect this all the time. I would rather prefer trading a supply zone or a demand zone than trading an FVG as my major source of reversal, a point of reversal, location to enter a reversal trade, because demand and supply zones are reversal trading. All right, trading demand and supply zones is basically trading reversal actually. So, but some traders trade FVG as a reversal, whether a buy or just they trade it as demand and supply zone, but I don't prefer doing that. But so that's one I want to show you right now how I trade FVG the most reliable way, in my opinion. You can see here as well, this is an FVG candle. You can see the market actually came down here and is about to reverse from here. Okay, the market came down to this FVG and is about to reverse. Some traders trade it this form. This is a some sort of bullish fashion of it, bullish FVG. Okay, so this is a bullish FVG. So, but now let me show you how I trade my own FVG. How I trade it. I actually trade it as some sort of return to order block. All right. So when I have, this is what I mean. When I have a sell scenario like this, and perhaps I have my supply zone here that I want to enter. I have my supply zone right here that I'm looking at trading, the mitigation of the supply zone, and now I get market comes into my zone. All right, market comes into my zone and then breaks. There is a shift in market structure, break structure, giving me what is called the change of character. As you are aware, I've done videos on that. Now, instead of me to wait for the market to come back to this to the zone created here, I can trade this FVG. I can actually call this an FVG, and enter this trade on the mitigation of the FVG. Okay, so that is how I trade the FVG. I trade the FVG as a return to order block. So this is actually same as return to order block, but in this case the market did not actually come to the order block. It did not actually come to the order block that caused the change in market structure, the change of character or the shift. I just trade the FVG, the gap in. I'll show you what I mean in a while. All right, so this is for a bearish scenario of it. For a bullish scenario of it, let us depict a bullish phase of this setup. You can see for a bullish phase, you see you have something like the market in a bullish phase, creating higher highs and higher lows. All right, creating higher highs and higher lows. For instance, assuming I want to trade the mitigation of this demand zone, I want to trade the mitigation of this demand zone, and I wait for the market to come down and comes right down into my zone. All right, and I wait for a break in market structure, or rather a change of character. Okay, now for an FVG, instead of me to now wait for the market to come down to this order block that caused this change in character or market structure, what I can do, I've just deleted. Let me try it again. I've just mistakenly deleted what I've done. Let's have it again. Sorry about that. So now I have my my demand zone, and now wait for market to come down to the zone. The market breaks structure to the upside, which is called the change in character. Now, instead of me to trade the mitigation of this originating or this order block, or the return to order block RTO, I could have as well just trade the FVG. Trade FVG. Trading the FVG like this. So this is fair value gap here. So this is one way you can trade the FVG, which is a more reliable way. Better than trading the FVG as a standalone demand or supply zone, some sort of demand and supply zone. All right, so it is better to trade an FVG as an entry model on a proper demand and supply zone, instead of trading it as a standalone demand and supply zone. I don't know if you get my point. I don't know if you understand what I'm trying to say. All right, let me show you the second way you can trade the FVG in a more reliable way. You can trade the FVG when there is some sort of there's some sort of buy stop liquidity, buy side liquidity or sell side liquidity. Let me depict what I actually mean. You can actually have like some sort of buy side liquidity, and now the market takes out the buy side liquidity. And now you have a shift. We call it a shift in market structure. Shift in market structure. When the market breaks down the candle that caused the buy side liquidity, all right, takes it out, and now you get into the trade on an FVG. All right, you enter the trade on an FVG, on a sell trade on the FVG. This is a sell scenario of it. For a buy scenario of it, you have the market takes out the sell side liquidity. The market takes out the sell side liquidity, and now there's a shift in market structure, a bullish shift in market structure, and now you enter on the FVG. You enter a buy trade on the FVG. So this is another way you can trade FVGs. All right, so the first way I've showed you how to trade the FVG as some sort of entry confirmation for a regular demand and supply zone, whereby the market a demand zone or a supply zone is mitigated, and the market forms some form of entry confirmation, like a change in market structure, or a change of character, and you enter on the mitigation, or rather the return to order block, or the return to FVG. Let's call it the return to FVG, and you get into the trade. All right, but in this second scenario, we're looking at market takes out buy side liquidity. The market takes out buy side liquidity, and now there's a shift in market structure, and now you get into the trade by trading the FVG. This is more reliable. For a sell side, buy scenario of it, the market takes out the sell side liquidity, and there is a shift. There's the sell side liquidity taken out. There's a shift in market structure, stated by this break of this sell side liquidity to the upside, and now you trade the mitigation, or when the market returns to the FVG, you trade the FVG, return to FVG, and now you do what? You get into the buy trade. So I want to show you how this works on the chart. Let me show you how this works on the chart right now. Let us see this. Now you can see in this case, you can see the first scenario I told you about. This is a supply zone, and the market comes into the supply zone, broke structure to the downside, and now we trade the FVG, return to FVG. We trade the return to FVG. Can you see? Return to FVG. All right, so this is actually the scenario, trading the return to FVG on a demand or supply zone. All right, another one, let us look for another example. And I've just pointed out this example in order to save our time. Now this is a buy scenario of it, a demand zone right here. There is some sort of a change of character, and now you trade this is an FVG fair value gap, so you trade the return to the fair value gap. You get into the trade. All right, this is a more reliable way to trade FVGs. All right, let's look for another example. Here again, as the previous example, there was a demand zone, and now there's some sort of change of market, change of character, and now you get into the trade by entering on the FVG, the return to FVG, fair value gap. Let's see if we have more example. Right, another example right here. Their market, there's a supply zone there, and the market got into the supply zone, mitigated the supply zone, and created some sort of change of character, and get into the trade on the return to FVG, return to fair value gap, and that was a lovely sell trade. Okay, so this is a more reliable way. See, you can see now the market reversed on the FVG, reversed at the FVG. But I don't trade FVG as a supply or demand zone. It is more, to me, it is not as reliable as the regular supply or demand zone. It's safer, better to trade your FVGs as a reaction after a supply zone or a demand zone. That is a better, more professional way to trade it. All right, so that is what I thought to share to you right now. And if you are here to join my free Telegram channel, kindly do so. You are missing out. Like yesterday, we killed the market. You see that trade, the trade we did. All right, we traded the buy side. There was a buy side liquidity on the trade that we took on Euro USD, and you can see I shared that chart on before the trade happened. I actually shared the setup on the in a Telegram group, and when the market came to the zone, to the supply zone, I indicated, I give a signal that the market has come to the zone that you should watch out to enter this trade. And you can see how we made good profit on that trade. We killed that market. The buy side liquidity we are taking out, and now the market's now sold off. So kindly join my free Telegram channel. The link to that group the link to the community is in the link in the description box of the video or in the profile section of this YouTube channel. All right, and also if you want me to mentor you personally on one-on-one, I'll be glad to do that. Regardless of how long you've been trading the forex market, I can make a difference in your trading. I can shorten your learning curve. I can help you to become a profitable trader. Even if you have traded the forex market for 10 years or 20 years, just contact me. I can help you you can have a change. That could be some sort of boost, some sort of change, positive change in your trading career by enrolling for a mentorship training. If you want to contact me, my contact detail is in the Telegram channel, and the contact of the link to the Telegram channel is in the description box of this video. So till I come your way next time, do have a wonderful day. Kindly give this video a thumbs up if you find something, if you benefited from what I've shared with you. Like this video, share this video, and comment. Let me know what you feel about this setup. Do have a wonderful day ahead. Bye.